Hey guys, welcome back.
And we're back. All right, Mr. Russell, don't take a drink without our traditional click.
Right. Now I can take my drink? Okay.
Yes. So our next topic, foreclosures and short sales, one of your faves.
It's not one of my faves. I think it's one of you guys' faves. We get a lot of calls about it.
So like scenarios are all the time like, hey, and this is ironic to me, like I'm a first-time home buyer, you know, it's usually they're not that educated about the process, but they just hear from family members of the media.
Get you a foreclosure.
Get you a foreclosure. So let's just talk a little bit exactly what a foreclosure is and why you don't want to do that. Foreclosure is basically you're not paying your mortgage.
You're not paying a mortgage, right? So your home,
you're missing your payment.
You lost your home. The bank has said, okay, you can't pay this.
Right.
We've given you.
We're taking it back.
We're taking it back. Yeah.
Basically, in Georgia is like a non-judicial, I think it's called, state where it's basically like you do not like go to a court system. It's basically like you stop making that payment, and that they have to send you a note and like you have 30 days to respond. But if you're not catching up on that payment, it's gone.
They're catching up to you and taking it.
The house is a foreclosure.
Yeah.
The difference between a foreclosure and a short sale is a short sale, sometimes a bank will work with you to take less than what the house is really worth.
So they'll give you an opportunity to sell it. They'll give you
an opportunity to sell it. Like you could stay in there a little bit longer, but it's still going to affect your credit report. Both situations, horrible for your credit report.
So typically what people think is because a house either got lost to foreclosure or a short sale where you say they sold, the bank has accepted a lower price than what the home is really valued for. People tend to think on the buying side of that, oh, I'm going to get this great deal.
Right.
So in some cases,
let's give an example. Like in 2008, right, when the market crashed, I think even in our community, they started building houses at a very high price point. Market crashed. But the whole economy crashed. It wasn't like somebody lost their house and they got a great deal, right? It's tied to the whole economy. And when the whole economy crashes like that, that's when a foreclosure possibly could work. But in situations when you're in a big economic downturn, the average everyday American is going to be losing their jobs, losing their health care, all that kind of stuff. So you're not going to be able to take advantage of a deal, right?
But even so, I think taking advantage of a deal for you might not be a deal for you.
And let's talk a little bit about that. So not just in financial downturns, but like in a downturn, like in a strong economy like this, God bless you. In an economy like this, what happened in 2008, right, when all that financial disaster happened, is that they started incurring what's called private mortgage insurance, which is passed down to us as the borrowers that put less than 20% down. So now banks are much more protected in that situation.
They got smarter.
Right, when you default. They're going to charge you to insure them that if you were to default,
they're going to get their money.
They're going to get their money back. Yeah. So when a house is really in foreclosure, nowadays they're fixing it up. They're putting it in decent shape. They maybe put new paint and carpet in there and stuff like that.
They make the aesthetic look presentable.
But they're listing it with an agent still, and they're going to look at the comps. They're not going to say, oh, this house next door sold for $350, so I'm going to price this at $250. No, they're going to price it close to $350.
Right.
So you're not going to get these deals of $50,000, $100,000 of equity in it.
Well, let's talk about, because I think it's good to point out, because we kind of bash foreclosure.
Right.
And foreclosures are not bad deals.
It's for who is looking
for certain buyers. Like I would say, if you're an investor, a foreclosure or short sale, that's probably right up your alley.
An investor is not somebody that got a couple $100s in their bank.
Right. An investor can go in,
has thousands and thousands.
Because one of the things I don't think we said, and it's very important for you guys to hear, when you do a foreclosure, in most cases, it's sold as is.
Yep.
And what that means is you're not getting any warranty. You're not, even if you chose to get an inspection, which in some cases it's locked until you actually take ownership.
Right.
But even if you're able to get an inspection on the house, if that they allowed that for the situation,
your only out is just not going through with the deal.
Right.
But if you decide to go through with it because you think you're getting a deal,
you're accepting the risk that come with that house.
Right. So you buy that house and you say you don't have, like, especially when we were talking about when people are like first time home buyers, I personally, I don't know how you feel, would not recommend a first-time.
No, I wouldn't. But we get so many first-time home buyers that call, and because somebody has told them,
they hear
you should get a foreclosure. That's your best. That you'll get a great deal. They come into the conversation only wanting a foreclosure, so we have to hopefully, in some cases, steer them back to like, why would you want a foreclosure as your first home?
Right. And like even when investors hit us up, they say like, I want a property with a certain amount of, equity in it and stuff like that. You can't,
or not only equity, but they also will say where I can make a certain amount in rental income.
Yeah.
So if they know that, rentals in a certain area will yield them a certain result, that could be advantageous for them at that point to say, oh, I want to get that foreclosure because I know that the rent in that area goes for what I'm looking for.
And just also one other thing to consider, because I know your mom even got into this in Philly, is that there's a difference between an auction of a house and a foreclosure. An auction is really when you go down to the courthouse and somebody pays cash, typically sight unseen, because the house is so low. We don't get involved in that. That is strictly you going down to the courthouse, you putting down $50,000, $60,000, whatever it is, because you think that the house, once you fix it up, could be worth $300,000. But we're talking about the people that just hit us up and say, I want a good deal. I want a good deal. And they just think foreclosures and short sales are a good deal. It can be a good deal, but
it's the risk.
It's the risk. And you have to have the money to invest into that property because like Curt said, sold typically as is.
And, a lot of, like I said, to your point earlier, I would agree. I would not think that a first-time home buyer should be going into that situation for their first home.
Just to summarize this too, and why we stress everything that we tell you guys as far as getting pre-approved, being financially ready, expect property taxes to go up, all these things, because we don't want you to go into foreclosure. Because it really does stay on your credit for at least 7 years. That's a long time.
And and I think this is a little off topic, but just I want to put this out there because I've been seeing it a lot lately. Mm-hmm. Don't fall for these, realtors or brokers or whomever that are telling you that, bad credit is, I heard someone say something the other day about like a bad credit score doesn't mean you have bad credit. Yes, it does. You tell me what lending institution is going to give you the best interest rate when you have a bad credit score.
Right. I mean, bad credit is bad credit. So that means you're not paying your bills on time. When people say that or other agents say that is because like they're just trying to get you over that line to get qualified.
They're trying to get you the bare minimum.
They're trying to get their coins.
So they can get their coin or they can get the coin off of you in their pocket. Right. That's what they're trying to do.
So don't fall for that. Like we always tell you, technically you could get pre-approved at 580. But we also say get it, like your goal should always be in the 700s, at the very least in like 640s or higher, because it opens up different programs, and most importantly, that interest rate that you're going to be.
And I think that, so what you said, I think that a lot of times when people are just on that line of qualifying, not qualifying, but they find that agent or that lender that's going to do business with them,
those want to hear what
those are usually the ones that a year or 2 years after they purchase
are going in.
They're going in foreclosure
or short
because they're not ready. But somebody said, "Oh no, I can make sure that I get you.
I
ready.
can get you qualified. I can get you there."
And they really aren't ready. Yeah, be cautious of that because we don't want you to go in foreclosure.
At all, because this is that whole topic, and then somebody's going to try to profit off of your heartache, your loss, and you have to look at it that way too. People that are going through foreclosure. They're going to be pretty pissed off. So they're going to probably destroy the house. It's not going to be in the best shape, all that kind of stuff. So just keep that in mind, guys. If you're an investor or if you have money, maybe you've come from, a different state and you've made a big profit on another house. Yeah, we could open it up. We could look, we always say, we could find you whatever you're looking for.
Whatever you want.
So resale, new home, foreclosure. It's not any different from us. We have all that information out there in the MLS systems and just by networking with other agents. But it's definitely not for the first-time home buyer. It's not for somebody that doesn't have a lot of money because overall it's going to be sold.
Could you imagine like getting a foreclosure that you foreclose?
It happens all the time.
It's just crazy to me.
So guys, with that, that's click, Mr. Russell. Right. Another episode coming up.
We do kind of click.
We do click.
I think it's the drinks.
Click and click.